Spain declared a state of emergency as large areas faced a night without power after mystery outage hit Spain and Portugal yesterday, paralyzing transport networks and disrupting mobile communications. Spanish Prime Minister Pedro Sanchez said experts were still looking for the cause of the countrywide outage, which immobilized the rail system, delayed flights, and made traffic lights go dark. Spain gets 43% of its electricity from wind and solar power, and analysts say the combination of Spain's high use of wind and solar and limitations or challenges with connections to neighbors like France could have made it hard to deal with the power fluctuations. Also, French grid operator RTE said parts of France were briefly affected by the outage, but that power had been quickly restored. Hello and welcome to Global Business Insights, where we look a little closer at some of the headlines moving markets to equip viewers with perspectives to help them succeed in the marketplace. Our deep dive is on the oil markets, which saw prices zigzagging yesterday, ending the day lower with Brent Standard flirting with $65 per barrel. There are conflicting signals from the ongoing US-China trade talks, and analysts are watching developments from the US-Iran talks of a deal over their nuclear program. Iranian Foreign Minister Abbas Araghchi said he remained extremely cautious about the success of these negotiations as these nuclear talks continue this week. With Iranian crude returning, that would deepen the bearish oil outlook, and analysts are modeling how that would affect supply from Iran into what is already a slight excess of supply in the market. And on May 5, OPEC will meet to discuss output plans for June. It's speculated that some members of OPEC and their allies known as OPEC Plus will suggest an acceleration of oil output hikes for a second consecutive month when they meet on May 5. Also, internal tensions, especially with members like Kazakhstan and Iraq, both routinely exceeding quotas. All these are raising doubts about OPEC's ability to cap supply effectively, which further advances the supply surplus narrative. On the demand side, impacting oil prices are fears that several new forces seem to be weighing on economic growth, which was already forecasted to be tepid. A worse growth scenario could easily emerge if tariffs are not negotiated significantly downwards. The IMF also cut US growth forecast to 1.8% and raised recession odds to 40% with the spillover effect, which also puts further strain on oil demand. We are also getting conflicting signals from US inventory as US stockpile data added to the confusion. The API reported a large 4.6 million barrel crude draw, while official EIA figures contradicted this with a surprise crude build of 244,000 barrels. Also, with jet fuel deliveries hitting their highest pace since 2019. Still, the crude build was enough to reinforce broader supply concerns. Traders will, of course, be watching OPEC Plus policy shifts. They'll be looking at the US-Iran nuclear developments and US-China trade headlines for new clues to the supply-demand rebalancing dynamic. And with no bullish catalyst in sight, it appears sellers are likely to stay in control in the coming sessions. In short, it has never been this volatile, if not bearish, looking back over the last 3 years. BNP Paribas now expects Brent in the high $60 per barrel. That's in the second quarter of this year. The risks seem to be tilted to seeing Brent more in the low 60s, but we'll see what happens. Barring had to predict supply shocks, of course. Emerging value insights forecasts for crude. We are looking at $65 to $70 range in second quarter for the Brent Standard, with evident risks tilting more to the downside of that range. A suspected cyber attack has wiped almost £700 million off the value of Marks and Spencer as the retailer struggles to restore its operations after almost a week of disruption. M&S told some yesterday that it did not know how long it would take to restart online orders after the incident forced it to stop accepting orders of clothing and homeware on Friday last week. About 200 affected agency staff at M&S's main online distribution center in Leicestershire were therefore told to stay at home as there were fewer orders to fulfill. M&S's online sales of clothing and homeware amounted to £1.27 billion last year, equating to an average of about £3.5 million a day. US markets were initially lower, but we saw a late day wave of deep buying, which wiped out most of the losses that we saw in stocks earlier in the day, also as analysts waited for more earnings releases, eventually ending the day mostly higher. But JP Morgan Chase & Co.'s trading desk, they are playing the contrarian to the bearish mood, saying tailwinds, including big tech earnings and trade deal announcements, will continue to lift stocks after the recent rout. Indeed, a spike in the uncertainty continues to play out there. IBM seems to be sure about bets on the US as it says it will invest $150 billion, including on facilities for quantum computer production over the next 5 years, the latest American tech company to back the US administration's push for local manufacturing. Nvidia and Apple have both said they would spend about $500 billion each in the country over the next 4 years. Riyadh Air CEO Tony Douglas said it would be ready to buy Boeing aircraft destined for Chinese airlines if they are not delivered due to the escalating trade war between the United States and China. Boeing is looking to resell potentially dozens of planes locked out of China by tariffs after repatriating a third jet to the United States in a delivery standoff that drew new criticism of Beijing from Donald Trump. Porsche has revised downwards its guidance for 2025 amid US tariffs that are disrupting the global car industry. The car maker now expects revenue of between 37 billion euros, that's $42.21 billion, and 38 billion euros, down from its previous forecast of between 39 billion and 40 billion euros. It is also no longer expanding its high-performance battery production at its Cellforce subsidiary due to lower demand in China for all-electric luxury cars. Porsche has also struggled in particular with low sales in China, where its sales sank 28% in 2024. Singapore is introducing major changes to its work permit system from July 2025. Foreign workers will from July enjoy indefinite employment, higher age limits, and updated salary and levy rates, and will no longer face a cap on the length of their employment as used to be the case. Under the new rules, work permit holders can stay and work in Singapore indefinitely with no restriction on employment duration. The change will apply across all nationalities and sectors. The move is aimed at helping companies retain skilled and experienced workers for longer periods, also reducing turnover and promoting workforce stability. Foreign ministers from the BRICS group of developing nations are meeting for 2 days starting Monday, that's yesterday, to discuss a shared defense of the global trade system and coordinating their response to the barrage of new tariffs from the United States. The meeting comes at a critical moment for the world economy after the IMF slashed growth forecasts over the impact of the US leaders sweeping new tariffs. Top diplomats from the 11-member bloc, which includes Egypt, Ethiopia, India, Indonesia, Iran, Saudi Arabia, South Africa, and the United Arab Emirates, will also be reshaping an agenda ahead of a July Leaders Summit. Standard Chartered's economists Madhur Jha and Philip Dauba Pantanachi, in a recent note, have argued that the optimism that tariffs are about to be lowered is misplaced. Instead, the result, according to the note, is more likely to be an extended period of uncertainty. Those who desire to lower tariff levels to please the US must adhere to World Trade Organization rules requiring them to extend those cuts also to other WTO trade partners on a most favored nation basis, and this is unlikely to be acceptable to most economies for various reasons. The alternative, according to the note, is for these economies to try to negotiate free trade agreements with the US, but it will take months for the US to sign all those agreements. In the interim, uncertainty is most likely to prove a significant drag on growth for most of the year. And in South Africa, the fiscal battle rages as termination of the half percentage point VAT increase through a court order paves the way for the Treasury to craft a third budget for the 2025-26 fiscal year, but also with ANC ruling party allies and opposition parties expected to increase pressure on the Treasury Department to implement their own budget priorities. On Sunday, the Western Cape High Court ruled in favor of the DA and EFF's application to suspend South Africa's Finance Minister Enoch Godongwana's VAT hike before its May 1 implementation date. This has set the stage for a high-stakes budget battle within the coalition government and led to what has become a chaotic budget process and a lot of uncertainty, which of course will weigh on an already tepid South African economy. Afrexim Bank has launched a $3 billion revolving intra-African oil trade financing program to finance the purchase of refined petroleum products by African and Caribbean oil buyers. According to the bank, the program will support the continent's expanding refining capacity, much of which has been developed with Afrexim Bank's financing. It also aligns with objectives of the Africa Continental Free Trade Area, that is to promote intra-African trade, advancing industrialization and creating jobs in the continent. In Nigeria, Afrexim Bank financed the refurbishment of the 210,000 barrels per day Port Harcourt refinery and has recently approved financing for the development of the BUA refinery and Azekel refinery. Europe's largest lender, HSBC's first quarter came in beating estimates following strong wealth, business and corporate and institutional banking segments. The bank also announced share buyback of up to $3 billion. Profit before tax came in at $9.48 billion, better than $7.83 billion expected. Pre-tax profit soared nearly 317% from the previous quarter, but still fell 25% compared to the previous year. Germany's largest lender, Deutsche Bank, posted higher than expected first quarter profit, with net profit coming in at 1.775 billion euros. That's about $2.019 billion. The CEO, Christian Zeving, said the print puts the bank on track for delivery on all 2025 targets, also the best quarterly profit for 14 years. Additional loan loss provisions were made in view of possible impact of tariff uncertainty. British oil giant BP posted slightly weaker than expected first quarter net profit following a recent strategic reset and a slump in crude prices. The oil and gas major posted net profit of $1.38 billion for the first 3 months, missing analyst expectations of $1.6 billion. Asia Pacific markets mostly higher as markets weigh chances of resolving US-China trade tensions in the near term. European markets opened mixed as investors digest earnings for the impact of US tariffs and related global economic uncertainty. Well, that's all of this special edition of Global Business Insights. Thanks for watching. This is Bode Oshosami. Bye-bye.